Hi, welcome to the review problem for sources and uses of cash and the indirect cash flow statement, uh, as discussed in the text in Chapter 12. There are a few things I've put down here which might be important for you to review from the chapter, particularly about pure indirect cash flow statements. I'm going to skip over these. They are in text and have been covered pretty fully elsewhere. What I'd like to do in this video is jump right into an example where we're asked to create a pure indirect cash flow statement given only a company's transaction table for a period, and this year, the period being the year 2011. So most of the transaction table is here, and the rest is on the next page. And there are several tricky things to note about what happens to this company in this year and how to treat these things. First of all, gain on sale. Unlike loss on sale, gain on sale has no non-cash component. Okay, so that's going to be important to remember when we're working from net income to cash associated income on the indirect cash flow statement. Um, Also, when buying property, plant, and equipment on an invoice, which will of course, result in payables. In this case, the increase in accounts payable is going to be an investing source. And a good way to think about that is if we paid for the PPE in cash, would that be an investing source of cash? Yes, it would. So therefore, the accounts payable has to be investing. So we want to separate that out from operating accounts payable sources. Um, the third tricky thing to consider here, and this is very tricky, um, is that changes in net PPE, if we are counting with net PPE instead of gross PPE and accumulated depreciation, which we are in this example, um, whenever we do that, you have to be a little bit careful on your indirect cash flow statement because changes in net PPE that rise from depreciation um, are used in the cash flow from operations portion of our indirect cash flow statement to get from net income to cash associated income, right, to counter the depreciation charge in the income statement, which is clearly non-cash. Um, all other changes in PPE net, which would be sales of PPE net or purchases of PPE net, are investing sources or uses. Okay, so those are the only three tricky things here. And like I say, the change in PPE net associated with depreciation is especially tricky. Um, so to solve this, what are we going to do? You always want to create a direct method cash flow statement, income statement, and sources and uses table if you're going to find your way over to the creation of an indirect cash flow statement. So we have our direct method cash flow statement here. Important things to note are cash flow from operations, 245 million positive. Let's say our units are millions here. And our total cash flow, although not stated here, pretty easy to add up. 245 plus 5 is 250 plus 230 is 280. So we'll want to make sure we match the grand total and we match the subtotal for operations in our indirect method statement. Um, And next, I've got our income statement for this company in this period. The subtotal for EBIT is completely unnecessary. I just put it in there because you may see that oftentimes in the real world. So, important thing to note is net income is 400. And then we're going to have to look at the terms to get to cash associated income in just a bit. Okay. And here I've got a sources and uses table for the firm in this period created from the transaction table. And a couple things to note about this. I am showing just net income. It would be equally fine to include all of the revenue and expense accounts that go into net income. Um, and this just saves us some time. So that's why I did that. Let's see what else we have here that might be important. We want to separate, as is done in the transaction table, accounts payable from operations from accounts payable for PPE. And we also want to separate the change in property, plant, equipment net due to depreciation, um, our depreciation expense from our changes in property and property, plant, and equipment net due to purchases and sales. Okay, so let's see what else we've got going on here. Um, we've A good way to start now that we've got our sources and uses table on our indirect cash flow statement is to compute cash associated income. So let's just flip back quickly to our income statement. So one of our rules is don't touch anything associated with inventory. So that would include COGS and that would also include the inventory write-off. So we're not going to make any adjustments for either of those. SGA, the other side could be cash, so we're not going to touch that. Depreciation, we do have to adjust, and we are going to adjust that with uh, the change in PPE net associated with that, and that will effectively back out uh, the impact of this non-cash line. Gain on sale, as we said, and you can convince yourself of this pretty easily. Gain on sale is always associated with cash, unlike loss on sale. So we're not going to muck around with that. Interest expense could be associated with cash, income tax expense could be. So the only adjustment we're going to have to make here to get to cash associated income is depreciation. So now let me go back to where we're actually doing that. Down here in this section, I'm showing you how every bit of the transaction, and I've broken it up into two pieces for us just for clarity, but everything to do with gain on sale of miscellaneous item that came out of inventory has to do with cash. So that's why we don't make any adjustments for gain on sale, unlike loss on sale. So here it is. We go from net income, make the adjustment to back out the effect of the depreciation charge by algebraically moving our change in PPE net due to that depreciation charge over here. And our cash associated income is 425. And now we're going to go ahead and get our sources and uses from the working capital accounts. And when we do that, that's going to lead us to cash flow from operations. I've got some more reminders here for us. I'm going to just skip through those. And I've got for convenience here our sources and uses table repeated for us here so we can pick out our working capital sources and uses. And again, for accounts payable, we only want the operating portion of that. Okay, so where are our um, other working capital accounts? I'm skipping ahead here a little bit to show you the solution. And as you can see, I'm subtracting uses, I'm adding sources, and let's just go look at the sources and uses table to see where we could pick these out. Okay, so accrued interest is that's clearly operating, so that's going to be a source. Our accounts payable operating portion there, that's going to be a source. Loan is clearly not working capital. AP for PPE is clearly going to be investing. PPE net for depreciation. Remember, we've already used that. Okay, we've already moved this algebraically up to get our cash associated income section. Net income is already there. It's the first line of our indirect cash flow statement. Um, Not worrying about cash because that's on the left-hand side of our equal sign in this method. And let's see here. So we do have the increase in AR. That's going to be a use, and our increase in inventory, and clearly not our dividend. And so down here, I've got all the items I just talked about up above with proper algebraic signs for adding sources and subtracting uses. And I add these all up to my cash associated income, and I get 245, which is the same as we have in our direct method. Yahoo! Okay, so um, now we want to create the investing and financing sections of our indirect method cash flow statement. Um, and we just again jump back to the sources and uses table, and anything we haven't used before, except of course cash, we're gonna have to go ahead and use now. So what do we have the loan? Loan is clearly financing. That's a source, so that's going to be plus 50. We have our AP for PPE. That's going to be an investing source because it's associated with buying PPE. Again, we're going to leave that depreciation thing alone because we used it already for cash associated income. We leave net income alone because it's the first line of our indirect cash flow statement. We've already had that here. And let's see what else we have here. We definitely want to include changes in net PPE from purchase and sale, and we want to include the dividends. So this will also be investing here, and the dividend is, of course, financing just like the loan. So let's see what we got here. Um, the oh, Here we go. Here's what we've got. I've got all of those items, change in PPE associated with purchase and sale of PPE. That's net negative cash flow. And we have the net positive or net source from the invoice associated with the purchase. And then now, whoops, that says CFO. It should, of course, say CFF. So let me make that little correction right here. Uh, that should be an F. Um, we have our dividend, that's always cash out the door, and we got our loan, that's cash in the door. So our total cash flow is 280, and that matches what we had on the direct method statement. So here it is on the next page. our completed direct method cash flow statement. Um, and again, the total for operations has to match what we have in the direct method, and the total cash flow has to match what we have in the direct method. Um, Coincidentally, cash flow from investing and cash flow from financing sections match what is on the direct method. Um, but as we know, those subtotals won't necessarily match the direct method. All we can say is that cash flow from operations will match direct, and the total cash flow will, in general, match the direct. So let me just go back and remind us on the direct method statement. We have 245 from operations, 280 total is what I'm here to tell you we showed up above. And let's see if, in fact, that is true. Yes, 245 plus 5 plus 30 is 280. So let me just go and do one more quick thing here. If there is another instance of cash flow from financing being called CFO by accident. I want to change that, and there is not. There are just two instances of that. I've got the correction, so looks like we are good to go. Okay, and that's it. I hope this review was helpful.